If you're really into the world of investing, you probably heard of this word called unit trust, probably a few hundred times. I've heard it 1,000 times. John has probably heard it tens of thousands of times. So you're probably wondering, is it worth it to go for unit trust? And this video is the only video you need to know whether it's a yes or a no.
Yep. Hello everyone and welcome back to our channel, the FIRL Guys. My name is John.
And Jay here.
This is the best place for long-term stock investors. In this video, we're going to tell you about what is unit trust, why should you invest in unit trust, and what are the risks involved.
Then we'll look at who is it best suited for, followed by our conclusion right at the end of the video. Make sure you stay until the end. As always, if you enjoyed the video, give it a like. If you didn't enjoy it, maybe you are a unit trust agent. Nah, just kidding. If you really dislike it, just dislike it as well. But of course, please, we want the likes.
Yeah.
Remember to subscribe and click the notification bell so that you know when new videos are out.
So what are unit trusts? It consists of a portfolio of stocks, bonds, even commodities like gold, and other asset classes that are purchased by a fund manager and put into a portfolio according to themes and investing styles. Then what the fund manager does is it takes this portfolio and split it into equal units that are then sold to shareholders. In other words, it is a form of collective investment where people pool together money and the fund manager manages it, and they have an indirect access to investing in these assets. Now, because the assets are purchased in trust on behalf of the unit holders do not own these assets directly as well. To further safeguard the unit holders, even the fund managers themselves do not own these assets directly under their name. Instead, a trustee is appointed as the custodian of these assets, both for the unit holder as well as the fund manager. The value of the fund increases or decreases in proportion to the asset value that is inside this portfolio of assets. So you have the trustee who is safeguarding the rights of the unit holder and the fund manager who executes the investment strategy of the fund. Do they do all of this for free? No, they're not. There's no such thing as free lunch. They have to be compensated with a fee, and that fee is usually paid yearly. So how does a person buy a unit trust? It is usually through an intermediary, such as a unit trust agent or through a bank. And it is actually in a private market where when you're buying or selling, you're actually dealing with the unit trust company. In other words, when you are selling the units, there is always a ready buyer because the fund manager or the fund company will actually buy up your units. And there are units created whenever you want to buy. So there's always a very liquid market. There is a caveat to liquidity though. If a fund manager wants to cap the size of a fund, then there may not be units available for sale. Only unit holders within the unit still owns units of the fund. Contrast this to stocks where it is bought and sold through an open market like a stock exchange. There must be a willing buyer and willing seller. Then only the exchange can happen because you're not dealing with just the fund manager, you are dealing with another third party which you may never know. Therefore, unlike a stock where prices move every second once the market is open, unit trust fund prices are only reported at the end of a business day.
Now, let's take a look at some reasons as to why you should invest in unit trusts. Okay, the first reason is that it allows you to buy many stocks instead of just one, with very little money. Now, usually you need at least 1,000 ringgit to start with unit trust, and that 1,000 ringgit allows you to buy 20, 30, maybe even 100 stocks. But let's say if you wanted to buy 20 or 30 stocks straight from the market, chances are that 1,000 ringgit won't do it. I mean, take for example Dutch lady. Just to buy 100 shares, which is the minimum you need to buy, that already costs you about 4,000 odd ringgit. That 1,000 ringgit, not enough. The second reason is that it is a lot less volatile than stocks. So if you're afraid of volatility, unit trust is a lot better for you. When it comes to individual stocks, it's very possible to see it fall 20-30% in one day. But with unit trust, it's very, very likely unless there's like a massive global meltdown and the stock market crash like never before. But in normal times, very stable. Before I move on to the next point, I really want to know what is your take on volatility. Are you someone that can handle big drops and big swings? Let me know in the comments. The next reason why you should go for unit trust is if you are someone who don't mind outsourcing your investing for a higher fee. In this case, the management fees. So when you buy a unit trust, what you're actually buying is not a bunch of stocks. You're actually buying the strategy of the unit trust fund manager. If you don't mind paying a little bit more to entrust someone else to manage your money, this is definitely for you, unit trust. The next reason unit trust is definitely for you is if you are someone that does not want to invest in individual stocks, but you want to invest in themes. And what do I mean by this? So themes can be like the technology theme, or the software theme, or the oil and gas theme. There are tons of unit trusts out there, even in Malaysia, where you can say, hey, I only want to buy an oil and gas mutual fund or unit trust. Or maybe you are a dividend investor, then there's the income or dividend strategy fund that you can buy. Or maybe you think, hey, Asia Pacific, China, Japan, or all this Asia in general is going to grow a lot in the future. So I'm only going to buy a unit trust that is linked to these economies. So if you're that kind of investor, what we call a thematic investor, then individual stocks might not be for you, but unit trust can definitely satisfy that.
Now we're going to look at the risk of investing in unit trusts. Is it possible for you to lose all your money into a unit trust fund? It is possible, but very improbable. Why is that so? One is because there is asset diversification. Now, you know that unit trusts, as what MJ mentioned, you're buying a basket of stocks or a basket of other asset classes, and no one time it is very improbable for one of these entire fund to go bust. Secondly, they are very well regulated by the Securities Commission of Malaysia and any Securities Commission elsewhere in the world if the unit trust exists overseas. There's one risk that's very unique to unit trust though. It is the performance of the fund manager itself. Now, if you were to buy stocks on your own, the fund manager is yourself. But when you're entrusting your money into a unit trust, the fund manager's performance is key in determining the performance of the fund. Other risks involved in investing in unit trusts are very similar to other asset classes if you were to buy these asset classes directly, things like property or stock. So what are the risks? Currency fluctuation, the probability of this asset returning any returns to you in terms of growth. So those risks are very similar to unit trusts as well. One of the key risks that's very unique to unit trust is actually the fees that they will charge you. Now, most unit trust holders, if you buy equity funds, they will charge you a higher fee, both in terms of management fee as well as sales charge. But if you go for something more less risky, like a bond fund, then the fees will be much less. Therefore, be wary that these fees will cut into the returns of your fund, and make sure you know the fees before buying into a fund.
Okay, so who is best suited for unit trust? And what's our conclusion about all of this? The first one is that I think it's very useful to people who want diversification.
Yes.
They want to diversify, they want to own like many stocks, and they're very afraid of volatility.
Yeah.
If you're like that, then it definitely suits you. Now, the next one is if you want to, or you don't mind, spending that management fees.
That's right.
So in our estimation, management fees can cost you anywhere between 1.25% to 2%, right?
That's right.
And given that most unit trusts don't make double-digit returns, there's a high chance of what we call underperformance, meaning that they will not beat the market.
Yeah.
And that's a risk, but again, if you are willing to take that risk by outsourcing it to someone, unit trust is definitely for you.
Yeah.
So these are the key 3 to 4 points. Oh, and one more, if you're a thematic investor. In other words, you don't really know which stock is going to win in an industry, but you know that industry is going to win. Let's say.
And you want to put it into a basket.
Correct. Let's say like cloud computing or electric vehicles. Then unit trust is definitely an option.
Yeah. So what is our conclusion to unit trust investing? We believe in the growth process of being an investor, and therefore we don't want to abdicate, in a way, the process that we go through when we learn about business, learn about the stock, speaking to management, going to AGMs and getting to know how businesses work. That's something for us, but it's really up to you if you want to go through this process.
Yeah, and I'll just add that basically we like to DIY, right? We like to do it ourselves. But I also think that in the modern world with so much information, like you watching this YouTube channel, any other YouTube channel, I think that the trend of going to unit trust is not as attractive anymore.
Yeah.
You have as much information access or knowledge access to all these stocks as the fund manager. It's pretty much the same. You can know pretty much the same thing a fund manager knows. Maybe only a little bit less.
The information disparity is becoming smaller and smaller.
Yes. But remember, right, if you go to a fund manager, first and foremost, he may not want to help you make money for the simple reason that he's not incentivized to. He's not being paid a profit of the pot that you give him. He's being paid a salary.
Yes.
So whether he makes money for you or it doesn't make money for you, he's going to get paid anyway.
Yeah. And therefore, we believe that we want to be as factual as possible. It suits us as stock investors because we love to, like what MJ said, DIY. But you have to go and assess yourself whether this process is something for you. If you want that diversification, you don't want that kind of volatility, you feel having to overcome that fear is too big for you, then you may want to abdicate it to a unit trust fund manager.
Yeah, and another reason as well that I personally, and I think John shares with me as well, we don't like unit trust, is because most unit trusts don't hit the kind of returns that we want.
Yeah.
Right? I think less than 5% of unit trusts in Malaysia, and there are 600 over equity unit trusts, less than 5% or even way less than 5% actually make double-digit returns.
Double-digit, anything more than 10%.
Yeah, and if you're investing in the stock market, you need to aim, I feel, for double-digit.
That's right.
Because anything lower, you might as well go for properties or just keep it in EPF or ASB or whatever.
Yeah.
So yeah, that would be what I think when it comes to returns. So hopefully now you know whether for you, unit trust is a thumbs up or a thumbs down. Now while you're at it, make sure to watch some of our other videos for more awesome content. And of course, remember to like us on Facebook, follow us on Instagram, and see you in the next video.